Hey Bulls, how we doing? I have a lesson for you today. This is a pretty cool one. I couldn't wait to get this recorded. I just finished up yoga, and I wanted to make this. So pardon any noise. I am supposed to be going through the headset right now. So enough about me. Let's get to the story. This is a story. This is a lesson. This is a talk, and most importantly, this is also a world-class stock tip, which hopefully you guys can rely on me for going forever. Okay, I'm going to share screen, make this a bit bigger, and let's just go through it. So this is a lesson and a tip, and I titled this in the rather inflammatory and dramatic sense, as recommended by my marketers. How an act of God led me to the best dividend stock in a decade. And I have the stock tip for you and the post, and this one's for everyone. I'm putting this on the internet to hopefully gain more subscribers. We're putting out world-class shit, and let's keep that going. So again, excludes the dramatic title, starting out with a little bit of drama for you on a day that is really peaceful over here. I'm not going to disappoint you. Let's do this. So think about it. The whole idea of my Substack and my online presence, as well as my website, and the purpose of my life for the last 21 years is to be able to teach other people how to be world-class portfolio managers, while also trading my own money and telling you how I'm trading it. So this is a recent act of God. And I put that in here because the true definition of an act of God is natural disasters, terror, or spontaneous and unprecedented acts that happen in the world at any given time. So in Economics 201, you always learn that the purpose of insurance, the purpose of risk management, that is, and the purpose of portfolio management is managing risk. And there's two types. There's systematic risk, and those are the things that, like inflation. Those are the things like monetary policy. Those are the things that we have control of and that we can change. But there's also unsystematic or asystematic risk, and those are called acts of God. So I'm not going to preach at anybody here, and I actually mean this in a literal sense. That was an act of God. That recent hurricane that I'm talking about here. So Hurricane Burrow leaves millions without power in Texas. So this is what I kind of woke up to the last couple of days. I also have a little brother that lives in Houston. Called him. He's doing okay, but they're out of power as always. And I lived in Houston for call it 15 and a half years. 15 years. I don't know why I added the half. But for 15 years, I lived there and we dealt with this. This was a common thing. So, first of all, I feel bad for everybody that's going through any of this. And just from the pictures alone, Texas Stadium's roof got pulled off. That's okay because we're going to raise the roof with CJ Stroud this year anyway. They're calling it 28 to 32 billion in economic impact. I'm certain it's more than that. And I'm going to tell you why here in a second. So, first we're going to start with empathy, right? It feels awful, blah, 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 thoughts and prayers. But now we're going to greed. How can we turn this into a positive? How can we switch the story around, and how can we make some money, right? That's what I went to. And the first thing I always think about is this. If you guys have seen the show on Showtime called Billions, Axe is the main man. He's this ginger here. And the story is that he saw what was happening on 9/11 and immediately pulled out his phone and used his hedge fund to short all the airline stocks. And that money then went to his hedge fund was actually managing the New York City Fire Department's pension fund, right? So he took a negative, turned it into a positive. He's ruthless, he's greedy, he's the man, right? We all want to be Axe. So the same thought process here is that, first of all, my internet went down too, and I'm in Texas. I'm in Austin, 200 miles away. And I noticed on social media the second I pulled up my phone to actually start this research that apparently a lot of people were commenting and sharing and socially itching and complaining about the internet being down, Wi-Fi in particular for all Spectrum users. Spectrum is a gigantic telecom organization. If you don't have it where you live, it's ubiquitous. It's notorious. They're everywhere. It's right up there with AT&T and Verizon and really all of them. Qualcomm, all of it. So let me take a quick drink here. You guys can think about what you how does our brain start working as a portfolio manager, right? The first thought is going to be short the energy grid by using utilities or mid-cap energy companies based out of Houston. Yeah, I'm sure y'all would have thought that, just now, right? How do we make money off of a natural disaster that is knocking out power and internet? Well, that is true that you can do this. I've actually tried this before. Let my loss be your gain. Um, when it came to Hurricane Harvey, which is like really about probably 10 times as bad as this one, it was an absolute disaster. I went the route of shorting small cap energy, and I didn't do horrible, but I didn't make as much as I thought. And through that research, I realized that these energy companies share risk as they're supposed to, as any good company does, and they hedge the price of their energy, and they also reinsure themselves through other type of funds and derivatives in companies, basically such that they're insured against some of these natural disasters. So when this happens, they get a bit of a paycheck. Now they have to pay a lot for that insurance, but that's the reason it doesn't work to short energy and utility companies during these type of times, right? So first of all, why didn't this work? That's why. Okay, next thought number 3, right? These companies have insurance against the act of God, and really that means natural disasters. Funny enough, when I was writing this, I just thought about a CFA question on the level 1. And we had to define certain disasters like spontaneous combustion, something I hadn't thought about in a million years. But we that was the answer included in what is an act of God or an anomaly, right? So that's just a quick lesson. Teach back. The lesson is that if you're ever taking the CFA and it asks about spontaneous combustion, that's the answer. Don't ask me for any more. Thought number 5, we learned that this is on Spectrum Telecom. By the way, if you do want to short them, I don't think it's a horrible idea. They do have a decent dividend, but SBP is the ticker. Now, remember, I'm not shorting it. I decided I'm against that. And instead, where can I find a company that operates in a similar fashion, but without that risk of natural disaster or unsystematic risk, right? So Spectrum's trading at 81. The chart actually is very, very good. You'll look at the 65-day range. We're kind of right at the bottom end of that. But it was either short, which would be the obvious companies, incredibly geographically broad companies don't have this problem. I found that out as well about Spectrum in my research. So I just thought about other telecom companies, and are there companies that don't have to worry about the risk, but also still carry energy as well for internet and cable and phone service, right? Well, I discovered that the real money for these utility, energy, and companies, telecom, you can also put these in your process or in your portfolio or just buy mine, such that instead of owning utility companies, why don't you just put 2 of the greatest telecom companies in as your utility, and now you don't have to fill up both of those buckets. You just fill one. So in my portfolio, if you've bought it, you'd realize that I have the dividend portfolio, especially I have T and VZ. T is AT&T, and VZ is Verizon. So even when you're not investing in the sector that you need to fill in your Morningstar graph or chart, or just as diversification is necessary, you could always just take T or VZ and put that in the place for your utilities, and you're not stuck with like a 3% dividend paying non-moving company like Southern Company or like any of the NRG or any of the electric companies. So that's a pro tip. I just made you all the money you'd pay in a subscription for your life on that tip, but we're going to keep going. I found a company that we need to be able to resist lowering interest rates coming in the future, right? And that's typically going to be dividend payers. Dividend payers are doing bad right now because you can go to a bank and get the same amount of money with zero risk, right? So I need one that's going to pay higher than a bank, and I need one that's going to go up in the future as interest rates go down. And I found a company that has a 6.4% dividend yield It rents out 40,000 cell phone towers, broadband internet towers, 5G towers. That's what we're going to call internet towers and phone towers. And by the way, they're all paid off. They have zero debt. They've already paid them all off. That's a lean company, man. That's a lot of profits if you have to think about what people will go to and what companies will go to the extent that they can provide themselves a service while others don't have it. And by the way, they don't need to insure it because they have 40,000 of them and it's all over the country and actually in South America as well. This company is called Crown Castle Inc. Crown Castle, think cell phone towers, think small, low overhead, think already paid off, think already built, think 6.5% dividend yield. And by the way, if you look at the chart, we've sold down over the same period that interest rates were supposed to go up. We've sold down the inverse relationship. So now as interest rates will be going down, the price of this will be going up. And I expect it to get back up into the 110s and 120s in a very short period of time. So did I just tell you about a mid to large or a smaller version of a large company with a market cap of 42.12 billion, a PE ratio of 30? 30 is actually very low for a telecom provider. Go look at AT&T's. Go look at Broadcom. Go look at any of those. They're not going to be that. Oh, by the way, it has a 6.46% yield and a chart that is having a MACD crossover, a chart that is decent as far as RSI goes, a chart that we know will go up in price when interest rates go down, whether it be next time or at the end of the year, like I think it will be, or maybe even only next year. But in the meantime, we're picking up more than you can make on a bank safe deposit, and you're going to have a very, very high likelihood of a 10 to 20% return over the next 2 or 3 years in a row, annually. Oh, by the way, volume's increasing too. Buy it, replace any dividend stock you own. This is the best one I've seen in 10 years, maybe since Garmin. So this is how an active God revealed the best dividend paying stock. Think like a portfolio manager. That, ladies and gentlemen, is exactly how it's done. That's what you're getting when you pay 20 bucks a month. If you put 100 grand into this stock, you'd have guaranteed $6,500 this same time next year without any growth of the stock, which I expect to be over 10%. Put 100 grand in that, you'd have, what's that, 10,000 on a 10% up and 6.4 thousand. Yeah, so you'd have $16,400 for paying for my service for 200 bucks a year. That's how you do it. Let's beat the shit out of the market. Love you guys, miss you guys. I'm back on video now that I've decided not to take an opportunity that was potentially going to affect our bullish. I laid my life on the line for you guys. Lay your money on the line for me, and let's both get rich together. Invest the best you can. AFG, LFG, LGR. Let's get rich. I'm the Sherpa. Peace out.